Welcome to session 5. How do you value the materials purchased? It is just not the purchase price which says 100 units at rupees 20 per unit and so the cost is 2000. You must also include all the costs related to its purchase and the cost you incur right from purchase till you bring it to your factory location. There are a lot of things associated with purchases like taxes, insurance, duties, freight, penalties, and subsidies. Now, the aim is to identify those items which can be added to the purchase price and items which are not to be added to purchase price from the given information. Let us walk through each of these items in detail. Discounts and subsidies offered by the supplier. First comes trade discount. A trade discount is offered by the supplier to its reseller or retailer. It is a reduction from the purchase price. Trade discounts are sometimes shown as deduction in the invoice and sometimes it is given separately. If it is already shown as deduction in the invoice, then there is no necessity to deduct it again, so ignore it. If it is not shown as a deduction in the invoice, then it has to be deducted from the purchase price. Trade discounts are usually given to customers to encourage them to purchase more in the future. Next comes quantity discount. Quantity discount is given only when the buyer agrees to buy certain number of quantities and it differs from one seller to the other seller. If the buyer buys more quantity, then the seller offers a discount. The treatment is same as trade discount. If it is already shown as reduction from the purchase price in the invoice, then ignore it. Otherwise, you have to deduct it from the purchase price. Next comes cash discount. Unlike trade discount, cash discount is not given at the time of purchase. It is given only when the buyer makes the payment within the set time limit. Hence, it is not to be deducted from the purchase price. We will discuss in detail about cash discount while solving problems. Next comes subsidies or grants. Subsidies or grants are received from government. It is also like a discount, which is a reduction in the purchase price. Next, we shall move on to duties and taxes. First comes the road tax or toll, which is paid by the transporter while using the road. This is incidental to the purchase and is necessary to bring the goods from the supplier's place to the buyer's location, often said as necessary to bring the goods to the present location and condition. Road taxes are hence added to the purchase price. Next comes customs duty. Customs duty is paid only when the buyer imports the materials from outside India. This is also incidental to purchases and is required to bring the goods to the present location and condition. Hence, customs duty has to be added to the purchase price. Next comes excise duty. Excise duty is a duty paid on manufacture of goods which are produced for selling. It has to be added to the purchase price. In case a SENVAT credit is available, then it is not added to the purchase cost. We shall discuss more about excise duty and SENVAT credit while solving problems. Next comes octroi duty or entry tax. Some of the local authorities or panchayats collect octroi duty when the purchased goods enter their jurisdiction. Octroi duty has to be added to the purchase price since it is required to bring the goods to the present location and condition. Next comes central sales tax. Central sales tax is a tax paid by the buyer to the seller only when the sale is happening between two different states in India. Example, the sale may happen from Uttar Pradesh to Karnataka. The seller may be in Uttar Pradesh and the buyer in Karnataka. It is an amount paid to the seller in addition to the purchase price. Hence, it has to be added to the purchase price. VAT or state sales tax. VAT or state sales tax is a tax paid by the buyer to the seller only when the sale is happening within one state. Example, the sale may happen from Chennai to Madurai within the state of Tamil Nadu. It is an amount paid in addition to the purchase price to the seller. Hence, it is added to the purchase price. Next, let us look into some of the other types of charges which are incidental to purchases like insurance, freight, penalties, and others. First, let us discuss about insurance. This insurance is mainly to protect goods during transit to the buyer's place from all risks, physical losses which may happen during transit. This may happen either by land, sea, or air. Since this is also necessary to bring goods to its present location and condition, insurance is added to the purchase cost. Next, we shall talk about freight inwards. It refers to the transportation cost associated with the purchase of goods. It is an absolutely necessary cost which is incurred to bring the goods to the buyer's place. Hence, freight inwards is added to the purchase price. Next comes the cost of containers. Containers are used to carry the goods to the buyer's place. In some cases, the containers are returned back to the suppliers after the transportation of goods. In that case, you do not incur any cost and hence the cost of containers are not added to the purchase cost. If you incur a minimal cost for using it, then add that amount of cost to the purchase price. In the case of non-returnable containers, that is containers which are not required to be returned back to suppliers, then it has to be added to the purchase price. Next, how do we treat the cost of damaged goods? If for Fingerfoods Limited, the damage or shortage is a normal occurrence which happened during the transit or due to the nature of the goods, then included in the purchase price. If the damage or shortage is abnormal due to the manhandling or mishandling of materials, theft, or some other unavoidable reasons, then it should not be included in the purchase price. Next, any kind of brokerage or commission paid during the purchase which are related to the purchase is added to the purchase price. Next, we shall see other types of costs which you incur while purchasing the materials. Demurrage. Demurrage is the penalty imposed by the transporter if the buyer makes some delay in uploading or offloading the materials. It is not a normal occurrence. It is abnormal and hence should not be added to the purchase price. Next comes detention charges. These are fines imposed for non-compliance of rule or law. This is imposed by any statutory authority. It is abnormal and hence should not be included in the purchase price. Next comes penalty. Any type of penalty is not a normal occurrence and hence should not be added to the purchase price. So far we have seen almost all the costs incurred in relation to purchases. Let's make your understanding even more clear by solving some illustrations. Now let's move on. It's now time to roll our sleeves up and get our hands into solving some interesting problems. Here is a question in front of us and let us try to read and understand the question. For Fingerfoods Private Limited, an invoice in respect of consignment of spice powders of type A and type B provided the following information. 10,000 kgs of type A was purchased at rupees 10 per kg and the total cost of type A was 1 lakh. 8,000 kgs of type B was purchased at rupees 13 per kg and the total cost was 1.04 lakh. Then the central sales tax came to 2%, which was 4,080. Then the railway freight, which came to 3,840. So the total cost came to 2,11,920. A shortage of 500 kgs in type A and 320 kgs in type B is noticed due to normal spillages. You are required to determine the rate per kg of each item, assuming a provision of 2% for further deterioration. Let us try to decode and understand the meanings of each of the line items given here on the question. The purchase cost of type A and type B spice powders are straightforward and fairly simple. Then comes an item called central sales tax. What is central sales tax? Central sales tax is a charge imposed by the seller on the buyer. The buyer is usually from a different state. The seller could be in Mumbai and the buyer in Kolkata. On every single sale made between the states, the buyer has to pay some taxes. And I know some of you might be wondering, why should the buyer pay? Well, we as citizens of India pay two types of taxes to the government. One is taxes on our income, like salary, business income, interest income, etc. And the other we pay it on the products we purchase and services we use. Here we don't pay it to the government directly. We pay it along with the price of the product we purchase or services we use. We pay it to the seller for products and to the person who does the services for us. They in turn collect the taxes and pay the taxes portion alone to the government. Hence, in this example, Finger Foods Limited has to pay taxes of 2% to the seller, and these type of taxes are applicable only if there is a sale happening between two states. The next line item is freight charges. These are charges incurred to transport the item from seller's place to the buyer's place. You are now required to compute rate per kg of each item. Now you might be wondering, what could be the new rate per kg when it is already given in the question. The examiner is actually asking you to compute the revised rate per kg after taking taxes, transportation charges, and revised volume into consideration. Now, here in our example, there is one more information which states that there is a shortage of materials. And this shortage was due to normal spillages. Normal spillages or breakages are bound to happen due to the nature of the product, and it has to be borne by the purchaser. The purchaser cannot sell the item. It is a waste and it has to be discarded by the purchaser. But the company has incurred some cost on it. It is not wise to report only the cost of the items on books when the material is not in existence and is thrown away. So, how do we need to go about it? Take a calculator and calculate along with me, and let's go ahead and try to solve this problem. The first step with the problem is to find out the remaining items which are good and not damaged or spilled over. So quantity purchased is 10,000 for type A and 8,000 for type B. Now we got to deduct the first damage of 500 for type A and 320 for type B. Also, it is said in the problem that there is a further damage of approximately 2%. When it is not possible to quantify or calculate the amount correctly, it is given as an approximation. So calculate 2% on 9,500 and 7,680. And this would come to 190 and 153.6 respectively. Now the quantity we have in hand which are good to use has been reduced to 9,310 for type A and 7,526 for type B. Moving on to part 2, we have to calculate the rate per kg. Remember, it is not rupees 10 and rupees 13 anymore. We are going to include taxes and freight charges along with the cost and find out the revised rate per kg only for the remaining items. So purchase price is 1 lakh for type A and rupees 1 lakh and 4,000 for type B. You have to now add central sales tax at 2% on the purchase price. Calculate 2% on 1 lakh and 1.04 lakh. After doing that, you have to add the freight charges. It is 3840 in total, and you have to split it between type A and type B. If you have to split the rate, then you could do it based on the number of items of type A and type B which were transported. So you split it in the ratio of 10,000 is to 8,000, that is 5 is to 4, and it comes to 2133 for type A and 1707 for type B respectively. Please calculate with the calculator. Now add up all the additional costs to the original cost and it comes to 104,113 for type A and 107,787 for type B. Now the final step is to divide the cost by the available quantity in hand, that is 9310 for type A and 7526 for type B, and you get the rate per kg, which is 11.19 for type A and 14.32 for type B. Let us now move on to the next illustration. At what price per unit would part number A32 be entered in the store's ledger if the following invoice was received from the supplier? 200 units of part number A32 was received at 5 per unit and the total cost is 1000. Less there is a discount of 20% and that comes to 200. Then there is an excise duty at 15% and it comes to 120. Then there is a packing charge which comes to 50 and the total cost is 970. A 2% cash discount will be given if the payment is made within 30 days. Document substantiating payment of excise duty is enclosed for claiming SENVAT credit. Now let us try to decode the line items given in the problem. This discount of 20% on 1000 rupees is the trade discount offered by the seller. The discount is told even before the sale is made by the seller, but it is shown in the bill or invoice of the seller. A discount is given to encourage the buyer to buy more in future and in large quantities, and this is trade discount. Next comes an item called excise duty. Excise duty is a type of an indirect tax which we discussed earlier. Whereas central sales tax, which we discussed in previous problem, is a tax on sale, excise duty is a tax on manufacture. The manufacturer first pays the excise duty and collects it from his buyer. We will learn more about excise duty in the subject indirect taxes. Then there is an item called packing charges. Packing charges is a separate charge made by the seller for specially packing things as per the buyer's request. Then the invoice talks about 2% cash discount. The cash discount will be payable only if the buyer, or the cash discount is allowable only if the buyer pays within 30 days. Unlike trade discount, cash discount encourages buyer to make prompt payment. Some buyers even take more than 30 days to pay. In that case, the seller will be losing. It is generally not concerned with the purchase or relevant at the time of purchase. It becomes relevant only at the time of payment. Hence, it is not usually added to the purchase price of raw material. The second point says document substantiating payment of excise duty is enclosed for claiming SENVAT credit. What is the SENVAT credit? You will learn a whole lot of it in indirect taxes, but let me quickly give you an idea on what it is. Excise duty is the duty paid by manufacturer when an item is manufactured. He can claim credit for set-off if he has already paid the excise duty on the goods purchased by him and he has used it for manufacturing his finished product. And we say he has taken a credit or set-off for it, and it is called SENVAT credit. Since it is a set-off, there is no necessity to include it in the purchase price of the buyer. Now let us move on to solve the problem. We have taken the net purchase price directly, that is rupees 800, because trade discount has happened even before the purchase is made and it should not be recorded in books. Then you skip the excise duty part since a credit is available for it. Next is cash discount. You don't need to worry about cash discount because it will happen at a later date only at the time of payment and it is not related to your purchases in any way. So don't consider the discount at all by deducting it from the purchase price. Please ignore it. Extra packing charges of 5 boxes have been added. This has been added because obviously it is connected with the purchase. So the total number of units purchased is 200 units and cost per unit comes to 4.25 per unit. The total cost came down because you didn't consider the excise duty which is refundable. You ignored the cash discount part. We have reached the end of the session. In this session, we learned about how raw materials are valued after purchasing them. We also solved 2 illustrations relating to valuation of raw materials. In next session, we will solve more illustrations and learn more about materials. And I'm sure I could make it a cakewalk for you. Keep watching our videos after logging into your YouTube account and do not forget to subscribe to our channel by clicking on the subscribe button below this video. You should subscribe because you get prompt notifications on new video uploads. This is also to avoid the hassle of searching the video every time you log in. So stay tuned.